Good morning, everybody. It is finally Friday. It looks like we made it. I'm in a relatively good mood for a change, although I've hurt my foot, for those that are wondering how my life's going. You join myself and Michael Brown for the Morning Blast, your very candid market-related podcast where we tear down the bullshit, add a bit of value to your day, put a smile on your face, etc., etc. Michael, how are you? Oh, so firstly, disclaimer, nothing said on the show is trading or investment advice. Don't be a mug. Do your own due diligence. Michael, how the devil are you?
Yeah, very good morning, Sharon. Good morning, everyone. That disclaimer gets ropier by the day, I think. But yeah, I'm not too bad. Very happy Friday to you, mate. Very happy Friday to everyone, of course. Oh, it's been quite a week, hasn't it?
Oh, has it only been a week, really? Feels like it's been going on for ages.
I know.
Also,
they're not
hang
even
on.
at the end of March yet.
Enough about my ropey disclaimer. Look, I get the point across. That's all that matters.
This is true.
You good, though? Everything all right in the land of Brown?
Yeah, I can't complain, mate. Can't complain too much, you know.
Well, you will.
I'm skiving today, working from home.
Work from home. Oh, hello. I'll be WFS later, I suppose.
Haven't you been WFS all day?
Well, yesterday.
All week, sorry.
No, only yes. Oh, no, maybe Tuesday. Yesterday I was. Yesterday I got serious work done, but enough about me and my serious work. I don't know.
I was going to say, we're just having a chat now.
I like the fact that I was more surprised by the fact that I did serious work than anyone else. Anyway, right, speaking of serious work, let's crack on with how we usually start the show, which is, of course, a market update and levels to watch from our dear friend Clive Lambert over at Futures Techs. Thank God it's the weekend, he starts with. See what I've done there? Thank God it's the weekend. And yeah, he's quite right.
Clive speaks for us all.
S&P sold off yesterday, dropping to 66.47 to 65.17, putting some distance between itself and the broken 200-day simple moving average. It's now eyeing the recent low at 64.85. Below that, 63.63 and 6,200 are the downside targets. In the Nasdaq, that made a new low for the retrace yesterday, the lowest print since last September. We'll have a chat about that in a second. Eurostoxx 50 futures are trading between support at 54.55 and resistance at 56.52. FTSE futures back above the 10,000 level, but not above 10,152, which is the Fibonacci level we've been watching for a little while now. Bund futures saw weakness back to 124.67, then 124.55 this morning. That's the lowest print for the front month since 2015. Obviously, low prices, high yields. Eurodollar and cable both set a weaker tone once more. Dollar yen is still hanging around its recent highs at 159.90. Gold and silver saw weakness again yesterday. Silver dropped to 17.5, but found a bid overnight. 70.50 protects 75.00, and that's the big resistance level higher up where we fell earlier in the week. Oil benchmarks bid for now. Brent crude dipped to 97.11 late yesterday, but that was swiftly bought. And this morning we're trading up around the 103 mark. It's amazing that we're kind of just taking for granted now, like $5 swings is just like nothing. That's like, you need to kind of recalibrate massively at the moment. TTF, European benchmark gas, has gapped up for 2 days in a row now. Yesterday's high at 55.66 is currently gap support, but that is still shy of resistance at 57.19 and 58.24. So some mixed messages there. EU carbon markets, finally from Clive, posted another doji. So it's a bit lost for now. The 74.74 to 74.84 area is the retrace target that we're gunning for. And that's it from Clive. Thank you very much. Quick question for you, Michael Brown.
Go on.
Are we still buy the dip territory? I personally think I don't think anything's markedly changed. I'm still happy to buy dips. In equities, this is.
I think we are as well.
Oh, yeah, God.
Absolutely.
If we both agree, we're probably wrong.
I think we are as well. I think,
not trading advice.
It depends on your time horizon. I mean, if you're asking me, no, very much not. I mean, if you're asking me, do you buy the dip right now as the S&P future trades back to flat on the day and expect to make money by the time you go to the pub this afternoon? Well, I mean, that's just stupid. You may as well flip a coin. If you're asking me, do I think you'll be in the green in, 6, 8, 12 weeks time? Yeah, probably.
Yeah. Yeah, that's my justification. I'm certainly not day trading these markets because I've got more important. Well, I've got other jobs to do, and unless you are willing,
you've got a real job now.
Well, exactly. And for those wondering, shameless plug. Obviously, thanks to Michael Brown for alerting me. Anyone still using TweetDeck, what are you doing with your life? Because it's getting worse and worse. And give me a nudge, and I'll give you free access to PIQ. There you go. We got some really good updates coming through on the PIQ platform, and it's got all the best Twitter accounts on there as well, with none of the bullshit. So do get involved.
And it actually works.
Yeah, exactly that.
Which is a bonus.
Which is a massive bonus without having to deal with all the thick of bullshit. Right, Michael, where should we start?
Well, we might as well start in the Middle East because, I mean, yesterday was a bit of an odd day because I must admit, at sort of 7:30, 8 o'clock last night, I was thinking I was going to be saying something quite different to what I'm actually going to say, because by and large, yesterday was a very risk-averse day, as Clive just alluded to, and actually the S&P 500 notched its worst day since the conflict began, and actually the worst day since the 20th of January, losing about 1.75% on the day. This came, I mean, there wasn't really anything by way of concrete developments throughout yesterday's session on the geopolitical front until after the close, which we'll get onto in a second. However, I think it was very much a case of kind of no news is bad news almost for the market. We've gone through the week kind of wanting to see concrete steps towards de-escalation, towards some sort of off-ramp being taken. And as yesterday wore on, we just weren't really seeing that. And participants decided to take down their risk levels and sell out of the equity complex as a result. However, that then changed after the market closed, 11 minutes after the market closed, to be precise, as I literally just left my chair, which was rather poor timing. We had a Truth Social post from President Trump, who noted that he has extended the Iranian deadline. This is, of course, the threat of the US striking power plants within Iran. That deadline had been due to expire on Monday. It was then due to expire today. It's now been extended for another 10 days until the 6th of April at 8 o'clock in the evening Eastern time. Trump also saying that the talks with Iran are ongoing and that they are going very well. He also noted that the new deadline is at the request of the Iranian government. Now, this is where I think people are getting a little bit hysterical and a little bit whipped up and getting overexcitable about this. I think we need to go back to what we were saying on Tuesday when we first had this kind of taco moment, for want of a better word, from President Trump. What's the signal and what's the noise? Because, Twitter is full this morning of people going, oh, Trump's negotiating with himself. The Iranians won't have asked for this. There's no way that Tehran are begging him for an extension. Again, I don't think that matters, to be completely honest. Yeah. The signal in this is, firstly, again, this may change depending on when you're listening to this, but from where we are this morning, 8:30 Friday morning, the first signal in this is that Trump is not yet ready to pull the trigger on a significant escalation. The second is that actually he's looking for a de-escalation. And the third, I would argue, is that he is still receptive to pressure from financial markets because let me just finish this.
Yeah,
I don't think it can be, I don't think it's a coincidence that we saw this come out 10 minutes after the close when the market has had its worst day of the war so far.
Well, quite. Right, exactly this. So my question to you, so obviously I was not around. Funny enough, I wasn't even in the pub, but I wasn't around when all this came out. So again, to bring me up to speed on the timeline on it. So we were shanking before the tweet came out saying about the extension of 10 days, right? Is that what happened?
Absolutely that. Yeah. So it was a pretty grim day for risk assets in general. We kind of started to sell off a little bit more significantly after the European close.
Was there a catalyst?
Actually, the S&P...
Sorry, was there a catalyst for that sell-off? No, it wasn't. It was just okay, got you.
Not at all.
Okay, that makes sense.
And the other thing is the S&P actually closed pretty much bang on the intraday low yesterday.
Right, got you. And that's why he came out after the close trying to pump it. Okay, this makes
I would imagine. And again, we might be doing 2 plus 2 and getting 5. But, if you look at the way that Trump has operated over the last 15 months, if we keep coming back to it, the White House Twitter account boasts about when the stock market hits an all-time high.
Yeah,
it's pretty damn obvious that they use equities as a yardstick and as a measure of success.
I mean, not just Trump, but we've actually seen, like you said, we've actually seen White House Twitter account say, this is the 37th all-time high in the Dow since this administration, more to come and all. So we know they're benchmarking against that, right? The fact that Trump has blatantly come out to try and support the stock market after the close when he's got his update, and probably a tap on the shoulder from some of his friends that are like, mate, you told us this was going up and we're up to our guts in nuts.
Yeah, I've just been margin called.
And I'm about to get margin called. What are you doing with your life? Would you be surprised if Trump comes out, Trump's sitting there going, why hasn't the market rallied its tits off? I've come out and I've said that I'm going to give him an extension. Because the market hasn't moved, well, really, we're still quite significantly down from yesterday's open. Going into the weekend, would you be a bit surprised for Trump to come out again with something else more like bullish for stocks?
No, not at all. I think this is
just quickly, I would be personally, my base case, I'm now expecting at least a couple of Truth Social posts trying to pump the market again. And I'd be absolutely shocked if we don't get anything from Trump today trying to support markets into the weekend.
Yeah, I would agree. And I think, it is interesting how we did have about a 75-point rally in the S&P future on the back of this post. And as you say, it's pretty much all fizzled out now. We're basically back right now to where we were trading before that. And yeah, I would be highly surprised if we didn't get anything from President Trump today, whether it be, on Truth, whether it be some media remarks, whatever. I think you've kind of got to be working on the assumption that he's tried to put a floor under the market. It hasn't necessarily worked as well as he might have hoped it would. So why would you not try again?
Yeah, no, exactly. Keep trying.
I think the logic, and this is not to say, again, I think a lot of people are getting caught up in this and saying, are you guys assuming that the war's over? Are you assuming there's going to be no economic damage, et cetera, et cetera? Not at all. I just think we need to separate those two things because, there is a clear desire within the administration to underpin risk appetite within financial markets. But at the same time, I think we are absolutely able to acknowledge that, the situation on the ground is still not great. So maybe an understatement there. The Strait of Hormuz is still essentially impassable, et cetera, et cetera. There is no reason to, that those two things are not mutually exclusive, so to speak.
Well put. Exactly that. Well, for once, apart from like this kind of update, there's not really much else going. Well, there's not really much significance to mention in the Middle East for a change. So let's take the opportunity to talk about non-Middle East goings on. Can I just quickly start by, I'm not saying I'm a massive fan of Mr. Bessant, but I think he's nailed it today or this morning in the early hours or last night, depending on when you're listening to this and what time zone you're in, where the FT came out and published this exclusive that the US Treasury Secretary Scott Bessant is discussing tightening the US's Treasury's oversight of the Federal Reserve by adopting elements of Bank of England's model, yada, yada, yada. Bessant has come out incredibly harshly against the FT. Basically, words to the effect of, what the fuck are you guys talking about? This is utter bullshit. Obviously, I'm paraphrasing slightly, but that's what's coming out.
Actually, I'm going to get the exact quote because it is an absolute corker of a quote. Bessant said on Twitter, this was overnight, and he has hit the nail on the head. He has said, I quote, "By publishing this explicitly false story, the Financial Times has officially become tabloid trash for market participants." And frankly, he's summed it up better than anyone else could have done, I think.
Exactly that, my friend. So I was going to say, anyone that, and I've already tweeted this, so apologies if you've just read it already, but anyone that's read / followed the FT for any number of years, I think everyone will tell you the same thing. It's been crumbling for many, many years. What it was it was known as a politically agnostic institution, right? It was, it was just about markets, and it was just about the facts of markets, what's going on in various economies of the world, what you need to be keeping an eye on, what's going on in markets, all of this stuff. It was, a must read for anyone in the city. It truly was. But leading up to I would say it was Brexit. It was when it was kind of their pants came down, the mask slipped, when it was, hang on a second, this is no longer kind of agnostic, and it just got worse and worse. And they've been kind of pushing various, I'm going to say leftist agendas, because that's what it feels like. And yet, what was, an absolute institution for anyone in markets, I think he's hit the nail on the head. It's become market tabloid trash. And it's such a shame. And I'm saying this knowing people that work at the FT. We have followers at the FT on PIQ. I've gone out for drinks with journalists and whatnot at the FT, and they're very nice people. And I've met, and funny enough, I've spoken to one that's since left the FT. That after they've left, I've kind of said, yeah, you weren't that far wrong, but obviously we can't agree with you publicly, even in the pub. But yeah, it is just a shame. So pour one out for the FT, I think.
Well, yeah, exactly. And it is. But, yeah, I don't really have a lot else to add to what you said or what Scotty Bessant has said, because they're absolutely right. I mean, we've kind of been known this in the UK for a long time. I think, I don't want to go over old ground, but Brexit seemed to kind of addle their minds, and they've never really been the same since. And I think they're now sort of falling into the same trap with Trump. They are. Trump is doing something that doesn't necessarily align with their editorial values. There's nothing wrong with that. Let me make that very, very clear. Yeah, you look at the print media here in the UK, for example, and the Guardian are a very left-leaning, but left-wing newspaper. I have no issue with that. No one else has got any issue with that, because they're very open about that. And it's the same with the Telegraph on the other end of the political spectrum. I think the biggest problem with the FT is they try and sort of maintain this illusion of political neutrality and objectively looking at things, but actually that couldn't be further from the truth.
Yeah, no, exactly that, my friend, exactly that. Moving on from the demise of the FT, what have we got to look forward to today, if anything?
Well, actually, just before that, I did just want to mention a couple of things on the UK, because we had some data out from the UK this morning, the February retail sales report. Headline sales and sales excluding fuel fell by 0.4% on a month-on-month basis last month, which was both marginally smaller declines than expected. However, this is another report where it shows why it's important to dig into the details of the release and not just look at the headline metrics, because actually the ONS noted in the accompanying press release that the data suggests, and I quote here, consumers brought forward their spending to January of 2026 in order to maximize on discounting during the period. Now, to me, that's not a particularly bullish sign in terms of the UK economy or the UK consumer, in that they are spending more in a month where traditionally anyway, certainly non-food products are considerably cheaper, and then potentially tightening their belts in the months following that. I don't think that's a particularly great sign. Of course, remember that's for a period before the Middle East conflict broke out, before this surge in energy prices, which is obviously another downside risk on the outlook. The other UK-specific story that I just wanted to flag very briefly, and I know we've just slagged them off, but this was reported first via the FT, so they've maybe slightly redeemed themselves a little bit. And this is that Jaguar Land Rover, they're going to shut their UK plant for a couple of weeks as a result of a fire at a supplier. The reason why I mention this is because those who are closely in touch with the UK economy will recall that last September, October, when Jaguar Land Rover shut their plant as a result of a cyber attack, that was a massive hit to the overall UK economy. I mean, industrial and manufacturing production basically ground to a halt. GDP growth actually fell for a couple of months, and that was because Jaguar Land Rover production stopped. So again, another downside risk being introduced into the outlook, nothing to do with the conflict in the Middle East, but it will just amplify any negative effect that may stem from that.
Yeah, no, exactly that. Exactly that, my dear friend. Anything else going on?
Yes, in terms of today, the data docket is very light, actually. We do have the final read on consumer sentiment from the University of Michigan. That's at 2:00 this afternoon. The index expected to fall to 54. The preliminary read was 55.5. The reason for this is basically the preliminary survey was done 3 weeks ago. War has continued in the intervening period. Gasoline prices have gone higher in the intervening period, and it's no surprise that consumer sentiment will have taken a hit as a result. Besides that, we've got a handful of Fed and ECB speakers, and of course do bear in mind the potential for some de-risking to take place into the weekend. One of the guys at Bloomy had some good stats on this morning. Since the conflict in the Middle East broke out, Brent crude futures, the front month, has been green every Friday since the conflict started, and the S&P 500 future has been red every Friday since the conflict started. Of course, past performance is not a reliable indicator of the future, but just something to bear in mind. mind. And also, of course, the potential for gapping risk when markets get up and running next week as well. But otherwise, providing that there is no sort of material news flow, I may be talking my own book here, but I think a lot of market participants will just be looking to try and get off the desk as early as they can after what's been another very, very hectic week.
Yeah, I can see in equities, in fact, it looks like we're taking a small leg lower since we've been on the call as well. So if we can bounce, that'd be, what time did that start? Yeah, about...
That'd be nice.
Yeah, we've been leg down since about 7:30 when I last checked, actually. Yeah, so if we could have a little bounce there, it would be much appreciated from the investments. But there you go. Michael, thank you as always, my dear, dear friend. Listeners, I hate to say it, but I'm going to jinx it massively. But hopefully maybe next week, if things are starting to chill out a little bit in the Middle East, we can get back to talking about non-Middle East things every day and kind of topics of the day, etc. But I appreciate
Fingers crossed.
I've just absolutely jinxed the shit out of that. So I apologise profusely to everyone involved. Listeners, we hope you've had a great week. We hope you've enjoyed the shows this week. Whatever you're doing this weekend, have a great one. Keep it tight. Stay safe. Remember to use protection, and we will see you all on Monday.